Hey everybody, Ron here. I just wanted to answer a question for a buddy of mine, and I believe it will answer a question for a lot of you out there. I'm sure that you guys have the same question that he asked me. And basically he said, hey Ron, should I be piling all of my money into a bank account and waiting for the next crash and just deploy all of my money and hit home runs with everything, or should I be investing now and just running my money long term? And I knew the answer to that question, but I thought, wow, this guy is going to need some data because I know him, and probably a lot of you would be appreciative of some data as well. And interestingly enough, we just went through the worst real estate meltdown in modern history, certainly in any of our lives. And I thought we'd just use some historical data from that crash. So what let's do is let's buy a property at the exact top of the market. We're going to use Kansas City as the market, and we're going to use the government statistics to show us what happens over the next 10 years. And we're going to invest our money during the same 10-year period, right? So we're going to buy at the top, and we're also going to we're going to run it for 10 years, and then during that same time we're going to wait for the bottom, and then we're going to buy at the bottom and run up to the exact same time period. Okay, so this is a 10-year run. All right, and this is what it looks like. We're going to use some very simple numbers because I don't want this thing to get terribly out of control and crazy. All right, we're not going to account for several things. We're not going to account for closing costs and a whole bunch of things like that. We're going to keep the numbers very, very clear and clean. Okay, we're going to use 3 returns, not 4. All right, the 3 returns are cash ROI, which is your cash flow divided by your investment. We're going to use principal reduction, which means every single month when you make your payment, you're paying down and you're creating more of a spread inside of your property. So your principal reduction. And we're also going to use appreciation and or depreciation. We're not going to use tax benefits because they could change, and really tax benefits don't have anything to do with this particular example. When you buy your properties and you run it, I'll have some more things to say about tax benefits a little bit later, but they're not going to be used in this particular example. Okay, this is the Kansas City market from 1979, I believe, all the way through first part of 2017. Okay, so what you can see here is that the graph's not crazy, and some of you out there may be saying, yeah, but what if we used Las Vegas's graph? It would be completely different, and you're absolutely right. And there's a reason why I've chosen Kansas City, and the reason is because if you were buying in 2008 and you were buying in Las Vegas, you were breaking the rules to successfully investing in real estate to begin with, because you were buying negative cash flow. Same thing in Phoenix, same thing in Florida, same thing in California, and a whole bunch of other markets. All right, but if you were following the rules, you could have bought in Kansas City, you could have had positive cash flow, and we're going to run through a deal. Okay, so what we're going to do is we're going to buy at the exact top, which, looking back, we can see exactly when that was. We couldn't see that during the market, so we really don't know when you're in it. But now, looking back with historical data, we can actually time the exact height. We can also time the exact bottom. And what we're going to do is run this out for 10 years. It just so happens that in Kansas City, we went from Q2 in 2007, which was the peak, to Q2 of 2012, which happens to be exactly 5 years, but that's exactly what it was. And then we're going to run it at another 5 years, ending it at the end of Q1 2017. Okay, so you can see exactly what we're going to do. So we're going to buy one at the top, we're going to buy one at the bottom, and we're going to run them all the way out to 2017, end of Q1. All right? And we're going to answer the question, can you really make money buying at the top of the market? And here we go. Let's start at the bottom, because everybody knows if you bought at the exact bottom, well, that's a home run, right? So if we bought at the exact bottom, we're going to buy a $100,000 property with $20,000 down. We're going to do a 30-year AM at 4% interest rate, okay? We're not going to get any return for the first 5 years, remember, because we're actually piling our money in the bank account and we're waiting for the crash. okay? So we're waiting for the bottom. Crash has happened. We're piling all of our money, and we're waiting, okay? So during that time, which we've not figured in here, you have to understand that your cash sitting inside the bank is losing money because inflation is eating it alive every single day because you're not making any money on your money, all right? But years 0 through 5, we're not going to have anything because we don't own anything. Years 5 through 10, however, we're going to have a pretty decent little appreciation run. We're going to have $20,000 worth of cash flow because we're getting a 20% cash return on investment, and we're going to have principal reduction, okay? And then I subtotaled all those columns, and I threw the total over here on the left, which is $60,470. That's a really, really significant return over 10 years. It's 300%, 30% a year. That's a fantastic return. And I think anybody watching would say that is a home run, okay? And if you did that 5, 10 times, however many times you could do it, your money is working really, really hard for you, okay? So I think that's a no-brainer. If I were telling my buddy, I would tell him this is an absolute no-brainer thing to do, okay? Let's see how we fared on our other purchase where we bought at the exact top and ran it for 10 years. What you can see is years 0 through 5, we actually lost nearly just over $22,000. We didn't get as good of a cash return on investment because the property prices were obviously higher than they were at the bottom, right? But we're still getting a decent return, and we got principal reduction. But years 5 through 10, we got that run up that we got on the other property as well, right? We just have to subtract out the $22,000 that we lost, and the subtotal is $10,640. So we're actually positive still over a 10-year period, and we've gotten 2 sets of $16,000 cash flow for a total of $32,000, and our principal reduction actually goes up because the longer you pay on your loan, the more principal you pay and the less interest you pay, right? So we're at $16,000, almost $17,000 worth of principal reduction. Add all those up, and we're at, wow, $59,610, almost identical to our home run purchase, right? Now, the crazy thing is that I didn't figure in here. So on the first one, we didn't figure in that you're losing money to inflation. On this one and on the last one, I didn't figure in the fact that during the first 5 years, we actually had a pretty crazy appreciation in cash flow because of the appreciation in rent. I didn't figure any rent gains on either one of these because I'm trying to keep everything simple, but we had crazy rent increases. Now, rent usually keeps pace with inflation, but during this last crash, it actually significantly outpaced inflation. Okay, so what you can see here is even though we gave a lower return on investment because we had a higher purchase price, or the same purchase price with a lower return, the property did really, really well. So what's the answer to the question? The answer to the question is if you follow the rules, you can invest in any single market condition and you can make money. The house didn't know it lost $22,000, and if you don't have to sell it in the first 5 years, which you don't if you're positive cash flow, you just write it out. And the whole time you're writing it out, you're getting a really handsome return, and you're creating equity through principal reduction. Okay? So the answer to the question is you can absolutely make money buying at the top. Okay? Just not if you're flipping real estate and not if you're breaking the rules and buying negative cash flow. All right? Let's take one more look at another market because this market's really interesting. We were selling in Oklahoma City at the time as well. And if you look at Oklahoma City, you actually would have made more money buying at the top. And the reason is because Oklahoma City actually barely lost any value at all. And it did it in the first 5 years, as you can see in the chart. It did it in the first 5 years, and then it bounced back a little bit for a positive gain over the first 5 years. And then the second 5 years, it gained. So there was no massive loss to recover from. And so the total was actually $82,000 or a 413% return. So the answer to the question is, so long as the deal is good, I don't try to time markets. And incidentally, if you actually take a look at the graph, What we did was we timed this perfectly, right? We bought exactly at the top and we bought exactly at the bottom. The reality of the situation is nobody knows exactly when the top is or exactly when the bottom is unless we look backwards. So let's say you're one of the people who keeps your money sitting in the bank and you miss the bottom by 1 year or even a year and a half, 2 years. You miss those 2 years of appreciation gain, and you miss the first 5 years of cash flow that you could have been making money on your money, right? And your money's sitting in the bank losing money. So what if you miss the bottom? And rents go up. So the entire time you're missing out, rents have been increasing, and your money should have been making more money for you. So I hope that answers his question. I hope it answers your question. If you have any further questions, feel free to give us a call, shoot us an email. You can make a comment. If you like the video, please like it and share it with all of your friends so that we can educate them too. Guys, thanks a lot for your time. Hope this was helpful. Talk to you soon.